Hey everyone, how's it going? Hope you're good. Tonight I'm bringing you some weekly markups for trend trading, and do like, subscribe, or share. And for anyone who's wondering, this isn't the same vest that I was wearing in the last video. I've got a lot of white vests, as anyone does. It's just so hot. As you can imagine, it's the 10th of August, it's hot. So this is the least clothes that I can wear. But I have got a nice tan. Like, share, subscribe. This is my Instagram. If you don't follow me on Instagram, like some of the pictures. Give me some more likes. Check out the highlights. So you know that we've really been trading for, a moment, and we have been seeing results. We have been seeing profits, and it's been a journey. There was some losses. There was some learning we had to do, but we have, we have been seeing results, ups and downs, but we move forward. So what one always does is checks out Forex Factory just to see what news is happening within the market. The most important news are normally unemployment changes, interest rates, GDPR, which is gross domestic product. Also, sometimes when governments are doing certain speeches, non-farm payroll, NFP, red flags, generally speaking, are quite important. They move whichever currency, is connected to that red flag. So do look out for red flags. So let's see. So yeah, this news might be volatile for NZD. This might be volatile for GDP, for Great British Pound. This might be a bit volatile for AUD. So do look out for that. And let's dive straight into the market. So always check the BXY and the DXY. Those are the currency indexes for the pound and for the dollar. So as we can see, I like to go to line so you can see the whole body, especially with BXY, the British pound index. It has a lot of gaps. But as you can see, there's a clear uptrend. So GBP should be going up. So anything that has GBP and then a currency should be going up. Anything so for instance, Euro, GBP will be going down. But this is just general anyway, so this isn't the only confirmation that you can take. It's just a little extra confirmation, an extra 10%. And when we go to the DXY, it's going down. So anything that starts with USD should go down. Then we've got gold is XAU USD should go up. So anything that starts with USD is going down. Anything that ends with USD is going up. General rule of thumb, it isn't the only confirmation, so do get other confirmations. But yeah, so with USD pairs, you should be looking for selling opportunities. But if you're doing trend trading and you're not holding the positions for too long, you can look for buys if it is going against what the DXY is saying. So we'll start off with USD CHF. So it was correlating with the DXY in terms of there's a downtrend, it was going down, but there's a slight uptrend as well. So as I said, I like to go to line, so I can't see no wicks and just do body to body. You can do wick to wick if you want to. It's completely down to you. It is completely down to you. So I'll just circle the first area of the trend line, one touch, two touch, and then we've got the third here, And then we can clearly see that that is an area of resistance, resistance, support, 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 and a little bit of resistance there as well. And what do we also see? We see that it's broken the downtrend, the uptrend, third touch, rejection candle is there. And when I say rejection candle is going the way that the buyer needs to go before you get in, so you can pull the trigger right there. Pull the trigger right there. Long position means it's going to give you the coordinates risk to reward wise for a buy trade. You can put a stop loss just beneath the low. Look, 19 pips, 1 to 3. To go for 65 pips, or maybe even 73. As you know, there's a high there, so it can go to that high and take out that high. Let's move on to the next pair. Euro CAD. Whew, look at that. Snipe, 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 snipe. 1 touch, 2 touch, 3rd touch, resistance, bit more resistance. We'll go into line so you can see it properly. Resistance, look at that resistance. You can see it clearly. Resistance into this area, resistance. And now if we see a rejection candle and then it sold down. Short position. Right here is where you could have pulled the trigger. Put it above that kind of area. And let's take it down until we see the risk to reward ratio say 3. Right there, look at that. You would have been out of profit. You would have already taken your profit. And that is 66 pips. If you're using 0.1, that is £60. If you're using the standard, £600. Or what you could do as well, if you wanted to, is there's an area here of support and resistance. Let's double check it. Yeah, so there's floor, ceiling. What you could have done is made it risk-free here. Put your stop loss right here. Put your stop loss right here. If you've done 2 trades, and you could ride that. You could ride that. Stop loss, risk-free. That means if the stop loss is here and you're in profit here, if it goes back there, you haven't lost no money. It's risk-free. So it's a win-win. And if it continues to go, you move your stop loss maybe to down here. Once it breaks and retests that area, and just keep doing that. So that's how you can catch the whole move and make it risk-free. So if you done 1 trade and it hit TP, trade 2 could have still been money. So yeah, that's a little fire trade, and it's only Monday. Okay, Euro NZD, no, not ready. Euro GBP. Oh, some fire right there. 1, 2, resistance, resistance, 3rd, rejection. Pull the trigger right here. Pull the trigger right there. Short position. Stop loss maybe above this area here. Look at that, 8 pips. That's a 1 to 6. 1 to 6. 1 to 3 means that you can, out of 10 trades, you can lose 7 and win 3 and still break even. So 1 to 6, just imagine how good that will be for your account in terms of risk to reward. And 50 pips, 0.1 is £50 standard, 1.00, £500. Could have made it risk-free maybe here, and then just continued to see where the move is. And look, there's equal lows as well. There's equal lows. It has been pushed down, so maybe what we might see now. This isn't trend trading. I'm just giving you some extra little pointers and tips. Up, when you see the up, then the down, and it's broken these lows. It may now go up because this is what institutional trading is about. Stop losses would be here. Lows are broken. Up before down, and then it goes back up, or down before up. USD JPY. That was a bit a bit rude. It broke the downtrend, done the third touch of the uptrend, but it hasn't gone anywhere just yet. It hasn't gone anywhere just yet, so maybe that might have hit the stop loss as well if you would have taken the third touch. Actually, no, because the stop loss would have been here. Stop loss would have been about, actually, let's say, so that's the rejection. Stop loss would have been about here. So you would have been in 15 pips profit. But if you wanted to make it 1 to 3, it just doesn't want to come down. No, now it is. Wanted to make it 1 to 3, then it's still got a bit of a way to go. Still got a bit of a way to go. CAD CHF, don't see nothing. Gold, look at gold. 1, 2, support, support, support. What we would need to see is the rejection buy. So look, we need to see this. Yeah, blue candle. Rejection buy, finish on a 1 hour, then you can pull the trigger. Then just do your long position. Long is buy, short is sells. So your long position, when you see that rejection, stop loss is underneath the low. And that's what, yeah, so make it 1 to 3. Gold is quite volatile. That's 300 pips. And that's risking, but that's risking 95 pips. It is quite volatile. So maybe use a smaller lot size for that one. GBP NZD. Did that say 4 hour? Yeah, it did. So if I don't see a trend on a 1 hour, I go to the 4 hour. But on this, can't see anything. 80 CAD, 1 hour. Nope, 4 hours on that one. Let's see what we can see. 1, 2, 3. Let's see if that was a 1 to 3. That could have been done. But this was, yeah, this wasn't even really this week anyway. This wasn't really this week. So we put it beneath the low. No, that wouldn't have. Yeah, maybe you would have been taken out of that trading profit successfully. If not, just once trades get to 39, 40 pips, just make it risk-free, meaning that you move your stop loss to this area where the line is, then it's risk-free. If it comes back down, you haven't lost anything. You've just broken even. Breaking even is better than losing. 4 hour, okay, let's see what that's gonna do. So euro, that's euro odd, yeah? All right, cool. So it was an uptrend. It broke. And the support and resistance down. It's kind of choppy. Maybe stay away from that. Normally when it breaks and retasts, you can get in for a sell, but it looks choppy. Stay away from it, maybe. It's down to you if you want to take that one. 1, 2, resistance, support, pull the trigger. Pull the trigger. Some simple stuffs. But yeah, there isn't too much going on, as you can see, because it is Monday. The moves really start happening on a Tuesday and a Wednesday and a Thursday. Those are probably the best days. So yeah, that wouldn't have hit the TP yet. Maybe one would have made that risk free. Let's see. 1, 2, touch, 3, get in there. So maybe if you see something like this and it's already happened, what you look for a re-entry is look at that. So for you to try and enter something that you see is already happening, if you see this is what you'd have to wait for. So you can see clearly floor, ceiling. It doesn't have to be perfect, as I've said in previous videos. So what you would want to see is, no, let me use arrows. Arrow, price to break, ceiling, retest of the floor. Then we go to the moon. If you didn't get in here, that's what you may want to wait for. So break and retest. Break and retest is, you know, it's kind of the way the market always does structure and respects things and moves. So it is quite decent. Now let's go to the 4 hour. Label your charts as well, so you know, is this chart for the 4 hour? Was I looking at this on the 1 hour? Where's the move? So we saw uptrend. It's broken the trend. Let's go to the 1 hour. So it came, it broke, it retested, went up. Yeah, you could have got in here. Could have gotten after this rejection. After this rejection, sorry. Short position. And yeah, if anyone doesn't get anything, just hit me up on my Instagram and I'll answer your questions. Okay, so let's say we put a stop loss here. So that is the last high. That's why the stop loss is there. 1, 2, 3. Still hasn't hit though. You could have made it risk free maybe when it got to this area, that area. So moving your stop loss into above the entry point. 4 hour. So once you know what you're doing, as you can see, you don't need to spend too much time on the charts. Don't be too scared or too confident to take a trade. Use good risk management, only risk 1 to 2% of your account, and just follow the strategy. No, nothing there. US 30 is a bit special. You need a certain account to trade US 30, but boy, that was fire. 1, 2, 3, support. Look how volatile US 30 is, meaning that it moves crazy. Let's say, yeah, so that's the rejection. So could have got in here. Stop loss just beneath here. But you see, it's very volatile. Look, that pips means exactly what it says it is, 300 pips. So yeah, but it would have been, so let's say you just put it beneath the low, use the smallest lot size that you can because you have the special trading account. You would have made 1,066 pips, but you're risking 348 pips or 181 pips to catch 1,000. So it's not too bad. 0.1 of 1,000 is, yeah, I think it's 1,000, and on a standard, it's 10,000. Let's double check that. Let's double check that. So 1.1 times, yeah. So that would have been 1,000. Yeah, exactly. So yeah, 0.1 is 1,000, and then 1.00. Yep, 10,000. 10,000, one trade. So yeah, I mean, that's everything right now. As it's a Monday, not many things have happened. There are a few things that we're waiting for, as you saw, so just rewind the video. Any questions you have, just hit me up on my Instagram. Like, share, and subscribe. Here is my Instagram once again. You know, like some of this stuff. And check out the highlights if you want to see previous results. And you know, look, 70 weeks ago, we have been trading for quite some time, so you know, we do know what we're doing. We do know what we is doing. But yeah, thanks guys, thanks for your time. Time is the most valuable commodity. You can make money, lose it, make it back, but that second that just went, we'll never get that back. So thank you for your time. Peace.